Alright traders, I'm back again with another video, and this time we're just gonna do some analysis, look at a few pairs, see what's on the horizon, and go over a couple things. Basically, we're looking at the pound yen here on the daily time frame, and what stands out to you with this pair here? Anything? I mean, from what I can see, there's a few things that stand out, but immediately I know that we're bullish because price is above the cloud, and every other sign is bullish. You got this crossover right here that was a bullish crossover, TK crossover. Your Kumo is future is still bullish. I mean, you got a lot of volatility in the market right here. You can see how thick the cloud is. This is a level going to be here of strong support, probably because it's above the cloud, and if price doesn't move too much higher, it'll still be above this all this thickness here. So in order to get a short opportunity with this, and for this to become a bearish market, you got to fall through this thick cloud. All right, you got Chico span above the price. So on this daily time frame, every signal is bullish. Now there's one other thing that stands out to me. This is a bullish market. I mean, a bullish chart. Everything on this pair is bullish, and what stands out to me is this long wick candle, very long wick candle. So let's go to the 4-hour time frame. That long wick candle is telling me that the bears are losing this market right now, and the bulls took control, and they're taking over the market right there. And let's see the strength. Okay, so sorry, let's go back to the daily. Show you one more thing. Back to that daily time frame. That level, this level here, you could see where price went way down below this level and then got pushed all the way up and closed up here. Now someone taking this trade here, just because this candle, they can see this run, and now you're chasing the market. Let the market tell you what it's going to do. You're chasing this market because you see this long run, then you get in somewhere in here, and then it pulls all the way back up here. Let this candle close and tell you what's going to happen. If it closes too far down here, then it's far for you and you can't get into the trade. It's another trade that you just let go by, because there's going to be many opportunities like that. But what I wanted to come back to was this line here. This is the daily Kijinsen right here, and you can see this level is holding as a very good support level, because you see where it was resistance here. Boom, price came down, hit that mark there, came back down, Kijinsen right here, back up here, couldn't break it, and then finally it broke through. So this level is a strong level of support and resistance. It's a strong area for you to remember. All right, then you see that long wick candle close there above that level after it went way down there. That's telling you a lot of clues right there. So they're clues you need to listen to. But then you go to the 4-hour time frame and you get conflicting information. If your information is that conflicting, you don't want to even take the trade. Don't even mess with it. Wait for it to set up like it should be. So basically on the daily is bullish. We should be looking for long trades. Now this looks so good to me that everything on the 4-hour is bearish, and this price came all the way up to this cloud here and bounced right on the cloud, and then I'm expecting it to, maybe like it does, it's come down to the Kijinsen, maybe it comes back to this level. This is that level of support and resistance, okay, and then maybe it goes off again. I wouldn't get into this until this market can close above the cloud here, but you see it forming this very thin cloud here. So if price stays in this area, then breaks out here, it's not much resistance in its way. That should bring Chico span above the price over here, and that'll be nice for a long trade, the way that was set up on the daily time frame. And then everything here should be set up for you. Now if going short on here, you take this bounce here, you're risking, you know, you're making a big risk. It's not a real high probability trade. We already took this trade the other day off of the retrace of the daily time frame, and we took that when this was up here. We called this, and it went all the way down here, went way past here. This was the level I thought it might go to. It went even farther and then came up to here, back up here. Now if you're playing a bounce again, hopefully you got the bounce early and you had a very tight stop loss, because this is the level that you're looking, this is your profit here in this area here, and it may never even reach that area. It may come back up and go through, and if it does that, you had a tight stop loss, and you already made a little profit. But this was one I didn't take. You know, these are little scalp trades really, because with the system here, I'm looking to get into these longer big runs. So that's why I'll be patient and wait for the market to come back up through there. I can find another pair to trade, so that's what I'll do. I'll go to the euro yen daily time frame. Looking at this pair on the daily time frame, what do you see on this pair? Well, basically you see the same thing as we saw on the last pair. Everything on this chart is bearish. Everything on the chart is bullish. And I got a very long wick candle here, and this candle, where did it bounce off of? That daily Kijinsen level. See that daily Kijinsen level? Let's put a mark there, because I see some more support and resistance being observed by this level. And so I always make my daily Kijinsen lines the same color as it is. So now when I go to the 4-hour, I can see this line, and I know what that is, and I know what that level is. Now you can see what happened there where that level is. Same thing as that other chart. Price came up, boom, couldn't get through there. Price came up, boom, couldn't get through there. Finally, let's try it again. Boom, didn't make it, bounced off, and then it made it after the third attempt. So again, this is another strong level. And you can tell it's a strong level because look what this last candle did. Went way down to that level. Went from way up here, way down to that level, and then it came back and way above that level. So again, the bulls pushed this market way up. And then now you see all the volatility in the market again. That's from all these different openings, all these opening closes here, different ranges that this candles are in. You can see this volatility here. So you got this high here, you got this low here, you got stuff here. This is very volatile, and that's what this cloud is showing you. All right, so we go to the 4-hour time frame. This is a bullish market, like we said, so we'll look for a long trade on the 4-hour time frame. And on the 4-hour time frame, traders, let's look at this and tell me this, just from everything that we've been going over, is this pair ready to trade? Is this pair ready to take a long trade right now? And if it is, then you know why in your head, and if it's not, then you still should know why. Look at that, how it held that level like I showed you, bounced right off of that level. This pair is not tradable yet based off of the Ichimoku rules, and the reason it's not tradable yet is because you could see this candle, this Chiku span below the price realm here. You need Chiku span to get above this price. You need it to get out here, and then this will be good for a long trade. Your crossover is not even developed yet. Your Kumo twist, no Kumo twist. Your TK cross is not developed yet. It looks like you had a nice bullish Kumo twist, and then now it looks like they're together again. So this market is very equilibrium, very equal. So something has to happen. It's going to break out either way. And from what I'm looking at off of that daily time frame, getting a better sense, I'm thinking to the upside. So you just want to see Chiku span get above this price realm here, because see, it's hitting off of the bottom of that candle and it's holding it back. It's like Chiku span can't get through there, but you want to wait for it to get through there, and price will go with it. So basically, that's what you're going to wait for, and then when that happens, you should have everything else happen too. This twist should happen already. This your Kumo twist should happen, and your TK crossover should happen, and that will put you for a bullish run here. So if you thought about taking this trade now and you lost because the market ranged for a while, it would be your fault because you didn't look at your Chiku span and get what the momentum of the market is. This is showing you that right now we should be ranging, but we came up from a long pullback, and then we came back up here. So we have to see what price is going to do. And right now, this is telling us no, not yet. The dollar yen basically looks like the other chart. The wick is not that long on this candle, but it's still a nice size wick, showing me that the bull's still taking over this market. So these yen pairs look like they're waiting to set up for something long. But then again, with the volatility of the market and the clouds getting thick here, I'm saying this, we're losing our momentum. Is this market, this bullish market, dying out here? So we want to wait and see. So let's go to the 4-hour time frame. So everything's bullish on that chart. So we're looking for long trades here. All right. So looking at this pair, looks just like the last pair, and based off of what I told you on the last pair, this is not ready yet, because look where Chico span is. You need Chico span to get out of there. You don't have your twist yet, and your crossover looks just like the last chart I showed you. Okay, now I'm in this trade here. This is a daily time frame on the US dollar CAD, and I got into this. I'll show you where and why I got into this. Everything on this chart here is bullish, so we're looking for a long trade. Let's go to the 4-hour time frame. Well, everything is bullish, like I said. So you got your price above the cloud, you got your TK crossover, and your future is bullish. Now remember, this future doesn't tell you where price is going to be. This future tells you where support and resistance levels will be, not where price is going to be. So don't think that your future is telling you anything about where your price will be. If it was, it would be like something reading the future and then you can get rich off of it. It doesn't work like that. This is not a crystal ball. This is just predicting where the future support and resistance levels will be based off of what the market has been doing. So that's what that is. Don't think that's telling you where price will be. Okay, so this is where and why I got into this trade. Chico span is above the price, and you already have a good crossover. Everything flattened out here, so we got the pullback that we were looking for. And once the market pulled back, now it bounced right off of that Kijinsen. This Kijinsen is going to be the 50% retracement of this move here from here to here. Then it retraced halfway, 50% right there. A lot of times that market's hitting that 50% and then then going back up. So I get into the market here and I keep my stop loss tight. I'm down here, so basically a 30 pip stop loss to gain about 80 something pips right here. Okay, so this will be the level that I look to see if we can get to that level, and then once we get to that level and I see price close above there, I can move my stop loss up there, and if I get stopped out up there, I'll take the 80 something pips. But if not, the market runs, and then I can keep moving my stop loss, keep adjusting my stop loss, and when the market falls to my stop loss, that's where my profit is. Now, another thing that you really like to see is we played this bounce, and I haven't shown you when we played the Kijinsen bounce. You do like to get outside of this Tenkan-sen right here. Now we traded, we were in the middle of it. We want to get outside of that Tenkan-sen and get your trade. But see, that's one of the rules. But my thing is, basically, I want to be as tight to the support level as I can, because if I'm up here, then it gives price more of a area to drop on me, and then I lose more. So I like to keep it tight. So I'll take it right on the mark. Okay, so here's the Fibonacci retracement levels, and this is why I took the trade. You could see price went up and then came down to the Kijinsen right here, bounced 50% retracement, boom, right there, and then you could see it came almost down to that 61.8 level, and very nearly did. So we call that 61 retracement, pulled all the way back that far, but the close was above the 50% retracement level. So see, we closed above that 50%, but we pulled all the way back to the 61.8, which, you're thinking, hey, I'm going to get this trade here. Well, yeah, you get that trade there, but still the market pulls all the way down here. So look where my stop loss is. It's below that level right there, a little bit below that level. So I didn't get stopped out. I'm in the market and I'm looking to see where it goes. Now, as the market moves, I can adjust my stop loss, move it from here up to break even, move it from there to here, and then keep moving it up. Maybe follow a candle, stay one below the candle, and then see what happens when we get to this level. All right, so unlike the other trades, let's take these Fibonacci retracement levels off of here. Unlike the other trade that I showed you, the last two or three with the yen, Chico span this time is above the cloud. It's confirming to me that there is movement. We are higher than the past 26 periods. So that means momentum is building and this market may start moving. Now, I'm looking at this level. We have to break this swing high right here, which is the fractal level. We need to break that level. And once we break that resistance level there, then I look for even higher prices. All right. US dollar, Swiss franc. Again, another bullish pair. Everything on this chart is bullish. Now you can see we're pulling away from the Kijun-sen, which is going to flatten us out, and we're going to want to get back to equilibrium. We don't want to get that far away from the Kijun-sen, but let's see how far it is, because it's only about 160, 165. Still can run more, but the Kijun-sen may pull this back to get it back into equilibrium, and then it may go again. So the market doesn't want to get too far from Kijun-sen, because the reason that works like that is because the high and low that Kijun-sen is getting its numbers from, based off of the 26 periods, that's going to be the average for the past 26 periods. So the market is going to come back to that average, to what it averages. All right, so more than likely it comes back to its average. Let's see here. Let's go to the 4-hour time frame. And now if you get ready with this pair, here's a nice bounce off of the cloud here. So is this pair ready to trade? Is this a good trade? And again, looking at this pair, just like the last few pairs we looked at, this is not a good trade for a long trade yet. Probably when price breaks this Kijun-sen, then you're in for a very good trade. And the reason is because Chico span is still below price. And you can see this crossover just happened on this candle that just closed. So a new candle opened up, and we got a slight bearish crossover up top here. So yeah, this is not a good market to trade. And you can see the bounce. You didn't make that much profit yet. And it looks like it's when Chico span is in this price realm, this market is ranging, and you can see the range that it's in. So need Chico span to get up there. Need to see price break this level for this to be a good trade. Now that bounce, you still have to look at your rules and everything else. All right, so that's the dollar Swiss franc 4-hour time frame there. And finally, let's go to this euro New Zealand dollar. This is another bull market. So I see all this here. Still got a lot of momentum moving here. Not a lot of volatility in this one. A little bit. Looks like it may start to flatten out. Let's see how far away from Kijun-sen we are here. Yeah, we're getting up there. Yeah, we're starting to get up there. You can see Kijun-sen flatten out. Once Kijun-sen flattens out, that's like calling that market back to it. So when it flattens out, it's saying, hey, get back here. Let me pull you back in. And that's what it's getting ready to look like it may do, because the market is over 300 pips away from here. So we may move up here a little more, and then Kijun-sen is calling it back. So on the daily time frame, maybe I look at a counter trend trade off of the daily time frame, which is the primary trend right here. It's going to be my primary trend, and my secondary trend will be off of my 4-hour time frame. But still, that doesn't even look like anything to take short right now. That was a bullish market that I just showed you on the daily time frame, and the 4-hour is also bullish. But I really don't like the way it's showing me this flattening out here, flattening out. You see the Kijun-sen's flattening out. A little bit of thickness, a little bit of volatility. Looks like maybe the market's slowing down, the momentum's losing, getting weaker. So maybe this rolls over, and then we look forward to crossover through the cloud, take this short. But you never know what the market's going to do, so you have to trade your plan. Have the plan, know the rules, and then trade it like you're supposed to. And just keep your stop losses tight, just in case you lose. You're going to lose, and you want to be able to lose 50% and still be profitable. So you may have two, three bad trades, but that one trade with this system is going to make up for those two or three bad trades that you had. But you have to be disciplined. You see these moves, you say, "Oh, I'm gonna get into it because it bounced," but Chiku span's not ready, or your Kumo twist isn't ready, and you say to yourself, "Oh, that's no big deal. I'm gonna take it because it bounced off of the support or resistance level." Yeah, it's a big deal because the rules tell you that the momentum's not there, or it's the trade's not ready. So those are things that are going to hurt you and hold you back. But that was it right now. This is all we wanted to look at today. Just trying to continue teaching things. It seems like it's getting to be redundant right now with just the basic stuff, teaching you guys this. And I want to make sure we're very, very well set with the basic stuff. So I'll keep going over this. And pretty much the way I trade is basic. I don't need to get all extensive and have all kinds of things on my charts and have 3 and 4 things to read, because then I get even more confused. Keep it simple and basic, and then I know what to do. I don't have to ask myself 5, 6, 7 things, look at 6 and 7 things and say, is this ready? I look at one thing on this chart, and then I look at a couple other little things that tell me, hey, yes, go, you got the strength. I look to see the signal, and then I look for the strength. All right, traders, hopefully this is helping you guys. I'm going to continue to just make videos for you and try to put my knowledge out there, what I know about the system, and hopefully it helps you guys. Don't run from the system if you lose. Just remember a few things, that yeah, you're going to lose, and maybe you're losing because this is a trend trading system, and sometimes you see all this range up here. This was not going to work for the Ichimoku system right here, but you have to know when this is no good for you to trade. Okay, and you can see when Chiku span's all in here, it's no good to trade. But then you see Chiku span bounce here, but then Chiku span got below this level. And what is this level? This is the support level of this range. This is where this market was consolidating and ranging. Well, this is where you could have gotten to the trade. And this is the trade that I called out the other day, that when we were up here, and I said if price breaks below this level here and then comes out of this cloud, this is going to be ready to trade. And sure enough, it broke out of that cloud, and you could have made a nice profit. I predicted that it maybe go here because of the support and resistance level of the daily Kijinsen, but it went even farther. It went even farther than this flat shadow right here, this flat bottom. So let's look at that real quick on a daily, see where that took us. Well, there's nothing here that I'm looking at that it really went to. Here's the level of this daily Kijinsen right here. So it went pretty close to that level. But at the time, the Kijinsen was up here, right here. So that's where we said it was going to go to that level. But it looked at past levels. And here's the past level, that flat Kijinsen. And that's a nice little level of support and resistance. All right. That's it, traders. I'm done for now. We'll be back again. And until then, God bless.